Are you ready to try your hand at placing your very first stock trade? Then check out our free guide, 10 Steps to Choosing Your First Stock to Trade, the Ultimate Beginner's Guide. In this free download, you'll learn how to choose the right kinds of stocks and how to find them, know when to buy your stocks and when to sell them, and you'll learn how to take your very first steps to becoming a stock trader and much more. Grab your free guide now by going to TRADEway.com/guide. That's TRADEway.com/guide. Hey guys, I'm David Mitchell, founder and CEO of TRADEway. What if God himself gave you a blueprint for how to handle your money? Well, the Bible is a practical book. Let's dive in and see what it has to say about wealth, about risk, about leverage, and about investing, and uncover how trading in the stock market can be a powerful tool for moving towards your biggest goals. We're so happy you're here. This is The Word on Investing. Hey guys, welcome back to our podcast. I want to talk to you today about the tried and true way to find predictable stock patterns and which ones still work. And the reason I say that, you can buy books out there that are 3 inches thick on stock patterns that go back to the early 1900s. And the problem is, a lot of those patterns don't work anymore. And you might say, well, why don't they work? Well, the main reason is so many things have changed, and the internet was the biggest change, because now we have online brokerage houses everywhere, and we have people lining up all over the country by the tens of thousands, probably hundreds of thousands, who are just jumping in there, placing a trade, and then running off to work, right? That's one reason we call the first hour amateur hour, by the way. So don't buy during the first hour generally. But anyway, here's the thing. That changed everything because the volume of trading is so much larger now than it was, say, back in my grandfather's day, back in the 1960s. So some of the books written back in those days have patterns in there that worked in the old days, but now because of the huge volume, they're not so great anymore. So one thing I recommend is go out to TRADEway.com and check out all the different programs that we have out there and learn how to know which patterns are great, because we only teach the ones that work today, right? So I'm going to name a few of them for you. First of all, there's a rolling stock pattern. There is a trending up or a trending down pattern. There are stair steps and flags that are fantastic patterns that still work today. There are flat bases. There's one called a cup and a handle. There's one called a saucer and a handle. There are W's. There are M's. We have head and shoulders. We have double tops, triple tops. We have double and triple bottoms. And we have gap patterns. And that's just a few. Those are ones that have the potential to work for you still today. And so let's go back and talk about them a little bit. The rolling pattern kind of describes itself. If you were to ask your neighbor how many directions can stocks go, they would probably say up or down. But the real answer is up, down, or sideways. And the rolling pattern is a pattern for a sideways stock. It just rolls up and down between two price points, a high and a low. You can actually draw horizontal lines that are parallel to each other across the bottoms and the tops. In other words, the lowest prices and the highest prices. And that stock will roll between those lines sometimes for months. And they're not that hard to find out there if you go out to TRADEway.com and you learn the skill sets for how to find them. And you know what else is cool? We supply you a stock basket that's got some of the best stocks in the world to be trading, and you're going to find a lot of these patterns in there. So they just roll up and down between these highs and lows. You learn how to draw a support line across the bottoms and a resistance line across the tops. And as the stock rolls down and hits that support line and bounces up a little bit, that would be your buy point. And you want to sell just before it gets to the resistance line. So that is a great pattern. Secondly, you have uptrending and downtrending patterns. Now, really, if you think about it, an uptrending pattern is kind of like if you turned your head sideways for a rolling stock. It's like a rolling stock going up or slanting up instead of going horizontally. And so you draw the lines in a similar fashion. You have a support line across the low prices and then a resistance line across the highs. The only difference is that your channel, and that is the space in between the support and resistance line, your channel is slanted upwards from the low point being on the left side of your chart and the higher on the right side. So it just slants up. But you buy and sell in a similar fashion to the rolling stock. You let it hit the support line, bounce up a little bit. That's your buy point. And then you want to sell just before it gets to the resistance line. And then you just wait and let these things roll back down, hit the support line, bounce up, and then you can buy again. And then when it gets close to resistance, you sell again. So those are two of the greatest patterns out there, really, and they're pretty simple to learn how to do. But you do need to go out to TRADEway.com and learn the right skills for how to draw your lines, how you know the right place to put those lines, where the perfect spot for that buy point and sell point is, and all those things. But it's not rocket science, right? It's just skill sets, and you can easily learn those. And the third one I mentioned really are a couple. It's called stairs and flags. And the reason I put them together, they kind of morph back and forth into one or the other. So the stair step pattern, if you could visualize a stock that shoots up quickly over 1 or 2 or 3 days, almost vertically, that would be like the step up on a stair step, right? And then what it tends to do is just go straight sideways for 4 or 5 days, and then it'll make another step up, and then it'll go straight sideways for 4 or 5 days, maybe even a week, and then a step up. And that's called a stair step pattern. What's interesting is they're pretty predictable and pretty repeatable. So what happens is you take a look at the previous couple of stair steps, and you can kind of notice how many days it takes to go sideways across the top of the step. And then you can estimate about how many days it'll be before the next one shoots up on the step up. So that's a good way to predict when to get into that stock and, when to get out. So those are great patterns. And then a lot of times those will morph into flags, and really flags are way more prevalent. There are flag patterns everywhere. They're so easy to find. And they're kind of like a stair step, except they look more like a flagpole. It may slant slightly to the right as it moves up 3 or 4 days briskly. And that makes a thing that looks like a flagpole. And then it will slant down from the left to the right over the next maybe week, 5 days, 6, 7 days. And it looks like a flag. And then it makes a flagpole and goes up to a higher place and makes another flag. And then it makes another flagpole, goes up to a higher place and makes another flag headed down a little bit. So those are very predictable too. And you tend to make the money on the flagpole part. Like you figure out about how many days the flag takes, and you predict when to jump in the stock. And then when that thing makes the flagpole, it only takes 1 or 2 or 3 days to jump all the way up to the next high. And that's where you would sell. Then you let it make the next flag, and what you predict when the flag is over and the pole starts, you jump in right before the pole, and you stay in it 2 or 3 days till it gets up to the next high, and then you sell again, and you keep repeating that pattern. So that's a great one. And then you have flat bases. A flat base is actually really powerful pattern, and what happens is stocks, as they tend to trend, they'll move up for quite a number of weeks, and they kind of make that rolling pattern slanted upwards. It just goes up and down, but keeps predominantly moving up. But after maybe, I don't know, it's different for every stock, but let's say 6 weeks, month, couple of months, all of a sudden that stock gets a little bit tired and it wants to rest for a while, and it just goes straight sideways for maybe anywhere from a week to 3 weeks. And that's called a flat base. So a base is just a place where a stock is resting, and they can be very powerful because if the stock market as a whole gets really positive again after your stock makes that flat base, then it will tend to zoom up off that base for another high. So it'll just turn back into an uptrend. You can kind of jump in off the base and take the next ride up. So flat bases are really powerful. And then these are a couple that you may kind of laugh when you hear it: a cup and a handle, or a saucer and a handle. They're really powerful though. And you have to kind of get your eye used to looking at them, but they literally look like a cup where the stock may be trending up, and then all of a sudden it takes a hit, and it may go down for about 2 weeks and then kind of go sideways for a couple of weeks, and then maybe move back up to the exact place or stock price where it started its way down. And then that looks kind of like a cup. And then it'll move down for maybe 5 days in a little slanted line moving down, and it looks like a handle. And then when it starts moving up, if it gets even with the right edge of that cup on high volume, that's a buy point for a cup and handle. Really powerful pattern if you're in a hot uptrending market. And then a saucer and handle is similar to that, but it just takes longer for it to develop. So a saucer would maybe not be so deep as the cup, but it might take 3 months to form. It looks like a cup, but it's 3 months worth of time, and it's a little bit shallower than the cup, and then it still makes the handle, and you still find the buy point in a similar fashion. I don't like the saucers as much as the cups and handles because they take too long. I like to make money faster. What do you think about that? So I like to look for cups and handles, flags and stairs. I guess flags are one of my favorite patterns. And then you have W's that literally look like a W, and we kind of joke that that stands for win, because a lot of times that will indicate the stock is going to move up further. And then you have M's, and we joke about that meaning murder. It means the stock is about to get killed and head down. So that would be a good pattern for puts, right? If you know how to do options, puts have the potential to make money on the way down. So if you saw an M pattern, you might think about puts. Now, another down pattern is called head and shoulders. And it makes a spot where the stock is in an uptrend, and all of a sudden it makes a little downturn for maybe 4 or 5 days. It could be longer or shorter, but then it shoots up and goes way higher, and then it goes sideways for maybe a week and heads back down, and then it goes up and makes another small attempt to move up, and then it fails and heads down. So when you look at it, the middle high kind of looks like a head, and the left and the right highs look like shoulders because they're a little bit lower, and it looks like a head and shoulders, and that is a powerful pattern for a down play such as a put play. Then you have what we call double tops and triple tops, and I like to use these a whole lot with an index like the S&P 500 because it kind of gives a view of the whole market, how healthy it is. And if you see the whole market move up for many months and then all of a sudden make a triple top, that is often a sign that you're about to have a correction where it may move down anywhere from 10 to 14%. And all the stocks, or I won't say all, but a lot of the great stocks tend to move down during that time, and it's a good time for put buying. But then if you see a triple bottom at the end of that, it's an indication that that down move is over and that thing is about to start uptrending again. So you look for triple tops and triple bottoms. Sometimes they'll just make a double top, which really looks like an M, or a double bottom that looks like a W. So you can interchange those names. And then we have gap patterns. Okay, so gap patterns are kind of a whole thing in and of themselves. So we're going to save that for another show, I think, but they're really powerful. So if you go out to TRADEway.com and you check out some of the home study courses on gaps, those are really powerful. All right, so now the next thing I think about patterns is, a lot of people say, well, that's hocus pocus. They can't really work. So I think the second thing is it's important to learn why these patterns work. Okay, so if you're looking for a tried and true way to find predictable stock patterns, you got to believe in them, right? So we have whole classes on that. Like when you go through step 1, for example, out at TRADEway, one of the things we're going to teach usually the second day of that 2-day seminar is we're going to teach you why charting works. And boy, that is so powerful. But in a nutshell, I'm just going to tell you why charting works. It's because every stock you look at has a market of people who buy and sell the stock. So remember, it's people. It's anywhere from tens of thousands to hundreds of thousands of people that like to watch that stock and buy it and sell it at appropriate places. So those people have personalities, and so that stock can have the corporate personality of all those people that trade that particular stock. Now, what's interesting is the chart of the price movement of any given stock. When you see the place where it turns and heads and goes down after an uptrend, or where it hits a bottom and turns and goes up after a downtrend, those turning points, some people call those pivot points, those are actually created on purpose by human beings. Now, I want you to think about it. If I were to ask you this question, would you think this is pretty good logic? Isn't it true that there is one individual somewhere in the world that controls the highest number of shares of any given stock? I mean, there has to be a person who controls the highest number of shares. So that would mean there is a person that controls the second highest number of shares and the third. Well, what's interesting is if you have 3 people who control the number 1, number 2, and number 3 highest, and I'm talking about millions of shares of a particular stock, if those 3 individuals were to do the same thing on the same day, it would move that stock in a particular direction. For example, if they're all in a particular stock and they all decide to sell all of their shares and maybe even short the stock on the same day, that stock could be in a nice little uptrend and all of a sudden it will turn and head down. So you'll have a pivot point where it's going up and it stops and it turns and heads down on that particular day. And then when those individuals get together and they let that thing roll down to a certain low that it's done in the past because they made it do it, then they all jump in and cover their shorts and buy the stock, and that makes the stock move back up. So that's what creates that rolling pattern that you see in the rolling or the trending up or trending down patterns. And you say, well, why does that move the stock? Well, think about it. The Bible teaches a law that God flung out there in the universe, especially after the curse. When we left the garden, we have a lot of laws that have to do with economics. Well, one of those laws is called the law of supply and demand. And it's a fact just like gravity. You can't get around it, and it just works like gravity. It's part of the universe. God put it there on purpose. So what happens if you think about a stock that has a particular number of shares out there floated in the world, people own them in the world, people and institutions own these shares of stock. And then you have some shares that haven't been bought yet, and the brokerage companies have access to those. So you got all these shares of stock, but it's a given amount or a given number of shares. And then, so that would be the supply. Now, let's say the supply of shares that exist that people don't own yet, but maybe brokerage companies control those. So you have a supply of stock still available to be purchased. Well, that number doesn't change a whole lot in any given stock at any given time, but the demand can change. So all of a sudden, if the whole market gets hot and there's great news out there in the world and great economic news, and people are looking for stocks to buy, they might find the particular stock you're looking at and start buying the shares. Now, if big institutions start buying them by the millions at a time, that takes a lot of shares of that stock off the market. So your supply goes down, but the demand is higher. And according to God's laws of supply and demand, that will make a price move up. Why? Because there's not enough of the stock to meet the demand, so people will pay more for it to get those few remaining shares. And the market makers know that, so they start stepping up the price of that stock all day. And you'll see that all the time in the stock market. Now, what happens when these three individuals that own the most of that stock decide they want to sell and short the stock, which is kind of like selling stock that you don't even own? We'll maybe save that topic for another time too, because you're going, what? But it can happen. So they sell, and just look at it this way. They sell all their stock, all three of these people at the same time. So now they have dumped a lot of shares, maybe millions of shares of stock onto the market, made it available. So the supply now has gone up and the demand stays about the same, perhaps on this given day. So since demand is not any greater and supply is high, then the market maker has to move that stock. So he starts lowering the price and selling the stock. And so the stock rolls back down. Now you can see right there is a very human reason for why charting works and why these patterns work. It's because there are human beings making the pattern work. And if there are two or three of them colluding, and now you say, is that even legal? Well, probably they shouldn't be calling each other on the phone, but you know what? They learn how to draw these support and resistance lines just like we teach you at TRADEway how to do it. In fact, we're drawing it just like they draw it. They know where the support line is, and so when it gets there, they turn around and buy the stock. When the stock moves up and hits the resistance line, which they, by the way, created, they sell the stock and short the stock and make it roll back down. So we're going to teach you how to draw those lines like they draw them so that you can know where they are making it turn, and you have the potential to jump in right after they jump in and to jump out right before they do. And guess what? That is a great secret to potential wealth creation in your family. So that's why charting works. Now, the next thing I think is important to understand to have a tried and true way to find predictable stock patterns is to understand which kinds of stocks are the best to trade and which ones might be the most likely to make good patterns. Well, let's think about that a minute. If you go out to TRADEway.com and you look at what we believe are the best stocks for trading, I'm not talking about long-term buy and hold, but trading, you basically have two kinds of stocks, value stocks and growth stocks. Value stocks are often used by the world. I mean, the MBA programs talk about it. Almost everybody online, almost every email you would get from someone suggesting stocks you ought to buy, they're value stocks. They're not actually the best stocks, for trading. Now, value stocks might be some big old company that's been in existence forever and they have dividends. You might take a company like IBM, or you might take a company like Delta Airlines, companies that have been around a long time. And those are not the best for trading. What you actually want to look at is you want to find young companies. So like Walmart 20 or 30 years ago, or maybe like Coca-Cola way back then. Think about a time when Coca-Cola was not in South America, was not in China, was not in India, it was only here. That would be a great time to jump in and buy Coca-Cola stock, because it was still a growth company. So you get the idea. So if you go out to TRADEway.com and you take advantage of a lot of our programs, you're going to get a stock basket with that program that has usually around 100 of the best growth companies in the world for you to be trading in. And that way, the fundamental analysis has already been done for you and the right kinds of stocks are in there. And you can just go through those stocks day to day and pick the 2 or 3 prettiest patterns you see. And it really gives you the potential to be more successful. So you need to be looking at a basket of growth stocks like TRADEway would provide for you. And then which ones would be the most likely to have good patterns? Well, really the ones that have higher volume. So you want to kind of look for stocks that have at least probably 500,000 shares traded a day if you're going to buy the stock outright. But if you're going to do options like puts and calls, I'd say 1 million at least. 1 million shares traded per day would be better. And stocks that have that much trading going on usually have big boys in there. And so you'll have those number 1, number 2, and number 3 persons who control the highest number of shares, and they're making that thing do patterns. So there you go. That's how you find them. Okay, guys, so how do you find tried and true stock patterns? Well, first realize they exist, right? Then go out to TRADEway.com and learn which ones actually still work well today. We'd be very happy to help you with that. And then it's important to know why they work, because you can't do anything you don't believe in. But if you really understand that it's human beings that make that happen and it's real, it really helps. And then the third thing is you need to know which kind of stocks to even be trading, which would be growth stocks, and which ones are most likely to make great patterns, the ones with higher volume, and that's the trick. And I really hope you enjoyed this show today. Hey, if you did, go out and rate and review it for us. That way people that have similar interests can find us. Maybe we can help them too. And hope you have a fantastic day, and we'll see you next time.